Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I just want to do a video for today's week. I got a new subscriber from last video, so thanks for subscribing. And I appreciate all the people subscribing. I'm doing this all on my own. I'm not getting funded by anyone. It's independent. So anyway, let's get into the news real quick. Today the markets they went down. I think this is just any type of correction. It's gone up so much. I do like talking like a bear, but I just want to say I don't think it's, at least not yet. The crash is coming, but not yet. But anyway, today's news shows that the economy's horrible. Building permits were a big miss. And if you look at it, Michigan consumer sentiment, that came in below expectations. So that was not good either. Not by much. Housing starts were a really big miss. Decline 14% month over month, which that is not good for the economy. And I was looking at the mortgage rates. So mortgage rates rose on to the wrong side of 7% higher. So if you look at this, we are coming to the precipice of like the worst of both worlds. And here's what I mean. You got higher interest rates with mortgage rates going above 7%. There's another chart I saw. Chapter 11 bankruptcies are aggressively rising too. So if you look at my last video, go look at it. Our last couple of videos, if you've been following this channel, you know that credit card defaults, they're rising aggressively. Auto loan bankruptcies are rising aggressively. And we have Chapter 11, so companies. So we have a consumer economy built off credit. People file for bankruptcy, they can't borrow again. So they're going to have to only pay what they can afford. So you got mortgage rates. And now on top of that, the PPI came in today. 5%. Blew everything. The markets went down. Gold's gone up. Now, the miners didn't go up. But I think if gold keeps going up, people are going to start going to the miners. And so we're seeing, this is stagflation, bad economy and actual inflation. And the only way to kill it is by aggressively hiking rates. But I don't see that happening anytime in the near future. But this is the one thing too, is everyone was celebrating in December the rate cuts. They were pricing in 6, 7. They were too premature. Inflation was not tamed, and the economy looked strong. There was no reason to cut rates. If the economy's humming at 5%, then you keep it at 5%. So that's what I wanted to get into. And if you look at the data, this is what it points to. Now, it's only one day, so I'm not going to get ahead of myself. But this is not looking good. And the last thing I want to get into is also today's news is Joe Biden did another student loan forgiveness. And this is what I've always been telling you. Those student loan payments coming back to fruition and it's a farce. They are just going to go one by one to give more loan payments, loan forgiveness until they can forgive everyone. So the first thing they did was existing laws. Then they did another federal thing that they can do. Now it's like a financial hardship if you are unable to pay it. And so, or if you went to a poor university. So yeah, we're gonna see that more of that, but that would lead to inflation because now, or even a worse economy, because instead of students paying it back, they'll have to raise taxes. But it's called hardship. But yeah, that's what I'm gonna get into, and I want to say if this data keeps going, this is the exact bull market precipice that we need for gold. Bad economy, bad economic data, and high inflation. Or not only that, it could even be bad economic data and the Fed has to ease and it's forced to ease because it has to. Like, why did gold have a big run up in 2019, 2020? Well, what happened is the unemployment rate in 2019 went up. And not only did the unemployment rate, but they were having the reverse repo problems. And so what happened? The Fed, it finally broke out of its downtrend of 1,000 to 1,300 and went up to 1,900 because it had to ease. It had to ease. Bad economy. 2020, there was the COVID, and it went down. The economy looked like it had to crash, and then they printed so much money. It was like 25% of all money created, and it went all the way up to 2000, and it would have gone higher if it wasn't for Janet Yellen's inflation's transitory target. Most people think they were lying for no reason, but I think the reason they did that is they didn't want gold running up to 3, 4, or 5,000. So she immediately provided cover for people to short or sell or liquidate the big long positions by saying inflation's transitory and that it's not going to be a problem. So, I mean, of course, 3 years later, PPI is still hotter than expected and it's not tamed. And, going back to my videos, the only way they can tame and stop inflation is by crashing the housing market, crashing the markets. They're not going to be willing to do it. So we're going to see more and more inflation. And eventually the markets will figure that out. I don't know when, but they will figure it out. So I want to go the other bull market, 2009 through 2011. Well, what happened in 2008? They were worried about everything collapsing, so the Fed had to ease. 2000, that was the other bull market. What happened? Tech bubble bursted. 9/11, they had the lower interest rates, the low rates. So, and then the other one, they had to monetize the money supply, guns and butter, Vietnam, plus the Great Society, 1970s. And yeah, that's sort of, and then there was OPEC embargo, among other things. So when the Fed has to expand the money supply, and there's a bad economy, that's the recipe for gold to do well. If they just keep low rates and they print money, but there's confidence in money supply, gold won't do well. So anyway, I just want to say this is the type of environment that will do well for gold. And let's see if this continues. I do think they're going to falsify the economic data and try to make it look better. So I'm not getting my hopes up. This is an election year. They're working overtime. But if you look at it, interest rates on housing is going up. Building permits are tanking. Housing starts. Credit card. And none of that. Chapter 11 bankruptcies. Whether personal or business, those are not those are rising at a very rapid rate too. So we're going to see, there's a lot of problems, and I think this will become obvious to the point next year where the government will just have to admit we're in recession. So anyway, those are my thoughts. If you like this video, hit that like button and subscribe if you already haven't, and comment below.